Hello guys, how you doing? This is Coach Keyon Corniff, also known as Mr. Finance, your favorite financial educator and business coach, and I want to welcome you to the HGI Opportunity. Today I'm going to share with you about our business opportunity and also how we educate families, and at the end we're going to give you some choices. But today I want to talk to you about if you have a dream, we have the vehicle. And that vehicle requires you to become a driver. And that's why we want to invite you to learn about our business opportunity today. Now, becoming a driver within our firm, you got to understand that in this industry, you got to think about the fact that everybody wants to become an entrepreneur. But when everybody wants to become an entrepreneur and become a business owner, most people don't have what's called a plan. What is your plan? And because most people lack a plan, they don't become successful in their business. But within HGI, we already have a plan, a system, and mentorship. We have the resources, we have the back office to make sure that you are very successful here. So that's the reason why when you look at the Great Resignation in 2021, there's over 4.3 million people have quit their jobs completely. And the reason why they quit their jobs is because we learned during the pandemic that there was no such thing as job security. We don't have job security in today's world anymore. So that's why we work in one of the highest paying industry in the world, where $45 trillion is moving every year. Guys, this is one of the highest paying. Did you know that the financial service industry is one of the highest paying industry in the world? And that's what the opportunity has we have on the table for you here at HGI. Now, when you think about the marketplace, what is the perfect market? Who can we help? The question is, who can't we help? When you look at the millennials, 82 million of them have student loan debts. When you think about Generation X, 64 million of them need some form of tax information or even learn how to accumulate some more funds. When you think about the baby boomers, they want to learn about wealth recovery and wealth acceleration. When you think about the seniors, there's 40 million of them that want to learn about retirement income. The great thing about our firm is that we can educate them, and you too can be in a position to help and empower people in this manner. So that's why HGI, we are the new disruptors, and we're here to make a difference. See, we teach people how to conquer their finances and make them financially educated. We want to make sure that people have what's called access to financial literacy. And in our firm, you're going to learn about the Rule of 72. You will learn about the power of index contracts. You learn about accelerated living benefits, and you also learn about the wealth flow formula. We're going to touch on these topics shortly, but for now, I just want you to know that these are some of the things that we teach in families and more. Now, when you think about our world class HGI opportunity, we have a great opportunity here. And the opportunity that we have to offer you comes at a low risk. We offer a risk free business opportunity where the startup cost is actually quite low. It's only $200 to go through our qualification period. Actually, no franchise fees. Also, no job loss. You don't have to give up your security of your job. You can learn and earn on with us on a part-time basis. No experience is necessary. We provide all the trainings and mentorship. And that's the reason why we also have a world-class dream, destination around the world where you could qualify for. In our firm, if you work hard, we play hard. And you and your family get to enjoy the fruits of your labor where you're able to empower families with financial education. So the more families you help, it puts you in a position where you could qualify for our dream trips around the world every year. Now, when we think about our world class infinity compensation plan, we have an amazing compensation plan. You can earn income here under personal production income. You can earn field training income, override income, agency expansion income, residuals and renewal income, and the most important one, equity share credits. This is where you move from being just a partner and you have the ability to become also an owner. And you want to learn more about that. So, guys, these are just a few. You will learn more about this through our field trainers. Now, when you think about how someone get compensated here, imagine you sit down with a family, you put together their budgeting plan. You're able to show them how they can save $250 per month. You show them how to use this money and put it inside of some form of life insurance. Now, by doing so, you help a family with that. In our firm, as an associate, you will get compensated $1,350 per transaction. So if you sit down with a family, it typically take you about an hour. So that's almost pretty much where you could potentially earn $1,350 per an hour. As a marketing director in our firm, you can become where you could earn $1,800 per an hour. You also, as a regional marketing director, where you're now in a position where you can help a family within an hour and you can make over $2,400. This is why you want to become a regional marketing director like myself and work very hard. In the first 30 to 90 days, you may actually accomplish this if you follow our system. Now, once you build a team within our firm, As a marketing director at a 60% contract level, you are now making the 129,000 plus dollars per year for helping 20 families learning how they can save an extra $250 inside of a life insurance. Also, as a regional marketing director, you could actually help go out there, you and your team help 20 families do the very same thing. And you're now in a position where you could earn 316 plus thousand dollars per year. Guys, once again, these are all part-time opportunities. So that's the reason why we say that if you have a dream, we have a vehicle. Now, when it comes down to learning the new rules of money as a student, it's important to learn about the money problems that many of us are facing today in America. Did you know when it comes to debt, the average total debt is about 163 plus thousand dollars, including the mortgage? When it comes to taxes, it says that Americans will spend more money on taxes in 2019 than they spend on food and clothing and housing combined. Imagine we're spending more money on taxes in these times. When it comes to inflation, they said that the average inflation rate from 1972 to 2022 was actually 3.9%. But just in the year of 2022, we have seen inflation gone up to 9.1%. Now, when it comes to savings, 45% of Americans believe that they will outlive their savings. And we tend to see that happening in today's day, where we see a lot of people coming out of retirement in order to go back to work because why? The fear of running out of money during retirement. Now, when it comes down to even life insurance, we have seen that in 2018, the average coverage that someone currently would have is about 168 plus thousand dollars. And the reason why that happened is because most people today does not know what is their dime. Now, their dime is a way for you to calculate how much insurance is needed, and your budget is a way to tell you how much you can afford to save or put towards insurance. So what your dime stands for when you calculate all your debt, your income, your annual income multiplied by 10 for a 10-year replacement, the balance of your mortgage, and the E stands for the education planning for your children. The average tuition per child is anywhere from 100 to 200 plus thousand dollars per child for college education. So that's why if you know your dime, you know how much coverage you would need. Now, when it comes to long-term care, it's also important to know that in 2021, the annual cost for home health aid was over 61 plus thousand dollars. And if you wanted to be in a nursing home in a private room, that's going to also cost you around 108 plus thousand dollars. So think about this. How many of you guys right now currently save 600,000 to $1 million set to the side just for long-term care? That's the reason why, when it comes to retirement, they said that the medium average retirement income for a retiree 65 and older is pretty much 47 plus thousand dollars, which we all know is not enough to retire comfortably. See, many of us was sold upon the 40-40-40 plan, where they said that we were supposed to work 40 plus hours a week for a company for 40 plus years, and we tried to survive on 40% of our income. Now, think about this. If we're struggling on 100% of our income today, what, how, and when are we going to be able to survive on 40% of our income? See, we were set up to fail. And many of us never got taught what is known as our FIN number, which is your final income number for retirement, which lets you know how much you need in order to retire comfortably. So that's why we teach families how to take control. And our job is to show you how to pay yourself first. We're going to show you how to earn additional income within our firm. As you see, we show you how you can become an educator with us, and you can earn an extra $1,350 per an hour if you're able to run our system and learn it quickly. Also, you can adjust your lifestyle. We're going to teach you how to live on a budget. We're going to show you how to avoid credit card traps. And we're also going to show you how to change your thinking when it comes to money. That's the reason why we have 6 steps to financial security. And success begins with financial education. You have to become financially literate. Here in our firm, in the next 30 to 90 days, you will learn how to increase your cash flow. So you will learn how to manage your expenses. And number two, you're going to learn how to manage your debt. So that way you can learn how to eliminate them. You're also going to learn how to create an emergency fund, how to save 3 to 6 months of your income. And you're also going to learn how to put together proper protection. So that way you learn how to protect your family's assets. You will also learn how to build wealth, how to save and where to save your money where it can outpace inflation. And number six, you will learn how to preserve your wealth, how to avoid probate by putting together the proper estate planning. We're going to help you to do all of the above for you and your family. So that's why we teach you how to conquer your financial future. And at HGI, we empower people with financial education, and we teach on topics like the rule of 72, like we talked about earlier, where it's a basic principle on how money double over time for you or against you. Also, we teach families about the power of index contracts. Imagine being able to participate in the success of the market with a zero loss guarantee. Also, you learn about accelerated living benefits. You're going to learn about life insurance that you don't have to die to use. And when it comes down to the wealth flow formula, yes, your financial needs change over time, and you need to know what to do every time it changes. So now let me give you an example of what is the rule of 72. The rule of 72 was created for you to learn how to calculate how many years it would take for your money to double for you or against you. So the example said that if you take 72 and you divide it by the interest rate that you're receiving for your money or against your money, the equal amount represent the amount of years it would take for that money to double for you or against you. So let's imagine that you're 29 years old and you want to retire at 65 years old. You have $10,000 you want to invest one time. Someone told you of a place that you could put it where you get 2%. 72 divided by 2 equals 36. That means your money will double every 36 years. So from 29 to 65, your $10,000 only doubled one time and grew to $20,000. Now, if you put it where you get 4%, 72 divided by 4 equals 18. So now your money is doubled every 18 years. So from 29 to 65, that $10,000 doubled twice and grew to $40,000. Now, if you put it where you get 8%, 72 divided by 8 equals 9. Now your money will be doubling every 9 years. So from 29 to 65, your $10,000 only doubled four times and grew to $160,000. Now, think about what is the interest on your credit cards? What is the interest on your bank account? What is the interest on your investments? What is the interest on your student loans? What is the interest on your car payment and your mortgages? And whatever that number is, divide it into 72, and it will tell you how many years that money will double for you or against you. And that's the importance of learning about compound interest. Now, when it comes to the power of index contracts, index bring together the best of both worlds for everybody. Now, let's talk about if you invested $100,000 in 1997 of August of that year, and you wanted your money back at August 2014. Now, over the years, you put that money in your traditional route, like a stocks, mutual funds, or you maybe invest in some IRAs or 401ks and so on. Now, over the time, that money goes up and down, up and down, up and down. We typically call these vehicles unsecure accounts. And within these vehicles, they are very unpredictable because it's tied to the market's fluctuation. So over the time, that $100,000 would have grew to a 219 plus $1,000. So in this scenario, you may say, wow, my investment have doubled over the years. Now, with an index account, same thing. Started in 1997, put $100,000 inside of this vehicle. Over those years, in 2014, it would have grew to 245 plus $1,000. So why is this? Why did it perform way better than your traditional route? It's because it guarantees you to never lose. So every time the market goes down, it locks in what you put in, and it also locks in what you made. So you never lose what you put in, and you never lose what you made. That's the power of it. Guarantee, no loss. Now, there's three ways you want to get taxed when you need it, guys. And one of the things I like to tell many of my students, and I would like to tell you today, is that if you understand taxes upon distribution, you will know where to save and invest your money. Let me break it down to you what it means. There's three ways. The first way you get is called tax now, also known as taxable money. Now, this is vehicles in your banks, mutual funds, or stocks. So when you put your money in these vehicles, you're able to, the growth of the money is taxed each year. So we call that capital gains tax. No contribution limits. It counts towards your kids' financial aid. No RMDs, no excess tax, and it may impact Social Security taxes. And it's also included in your state because it's considered an asset. Then you have what's called tax later, known as tax deferred. These are your 401ks, your traditional IRAs, your 403bs, and annuity. These vehicles are pre-tax dollars, which means you haven't paid any taxes on it yet, but you'll pay taxes later on. I'll talk to you a little bit more about that. Also, contribution limits are set. It counts towards your kid's financial aid. RMD is set at age 72, which means that if you don't take the money by your 72th birthday, you will end up paying 50% in a penalty where you lose 50% of your money that you have saved up for your retirement. Also, potentially 85% of your Social Security will become taxable, and every income before 59 and a half or after 59 and a half will be taxed as ordinary income. So, just to give you some understanding, let's say that you invested, let's say that you want to take a withdrawal of $5,000. And let's say that you're in a tax bracket at 0.25%, right? You got 25%. So that means you will pay taxes of $1,250 for every 5,000 that was withdrawn. Upon that happening, now you got to minus that from the 5,000. So the real withdrawal that you will be able to receive is $3,750 as an example. Now, that's because you pay taxes up on the withdrawal. But at the end of the year, they're going to tax you as ordinary income as well. So they're going to tax you as if you just made 60,000 because the 5,000 you withdraw, it counts that for 12 months, that's 60,000 per year. So you pretty much almost pay taxes twice. Also, it's also included in your estate because once again, it's considered an asset. Now, the third way that your money get taxed when you need it is called tax advantage, also known as tax free. This is where most people leverage what's called life insurance. And by leveraging life insurance, your growth is 100% tax free. There's no capital gains tax because you already pay your taxes in the beginning. So anything that grows later on is all yours to keep. No contribution limits, does not affect financial aid, no RMDs, no excess taxes, does not affect Social Security taxation. Tax free income through a withdrawal or a loan, and it's not included in your state, and is due to the IRS tax code 7702, Section A, which once again doesn't make life insurance considered to become an asset. So, if I was to ask you, how would you want your money to be taxed and where would you want to save it? Please let us know, where would you choose? Would you choose tax now, tax deferred, or tax free? That's the power of choices. So that's why when it comes down to understanding accelerated living benefits, you got to protect your life savings by using the leverage of life insurance with accelerated living benefits. It's important to know the right life insurance that you need to have. So accelerated living benefits are very essential for these very reasons. Let's say that, when it comes down to being sick, right? We're most likely to become sick before we die, right? So when you think about the type of sickness that we may encounter things like heart attacks, stroke, cancer, things in those nature. The good thing is that health insurance will take care of it, but it won't take care of all your costs. So all the costs is like what? Health insurance will not pay the mortgage. It won't pay for your loss of your wages. It won't take care of utilities or food or your kids' college education. And even at 65 years old, when you go on Medicare pays $0 for long-term care services after the first 100 days. What if you need long-term care for 365 days? So that's why it's important for you to learn about life insurance that you don't have to die to use. So imagine being able to have an access to your life insurance death benefit instead of using up your life savings that you need for your retirement. And you can use your life insurance, and guess what? That could cover the cost for any chronic, critical, or terminal illnesses, which then tend to use for your long-term care. That's why you got to learn about these different services. Now, when it comes down to the wealth flow formula, guys, you need to change, in time, but you got to always need accelerated living benefits. What I mean by this, just to break it down for you, there's two events you got to plan for in your life, guys. Two events. You got to plan for if you die too soon and if you live too long. Now, if you die too soon, you got to make sure that you have what's called your dime. You got to make sure that if God forbid you pass away prematurely, your debts will be paid off, your income won't disappear for 10 years minimum, and the balance of your mortgage will be paid off, and also your kids' education will be taken care of. That's if you die too soon. That's the power of having life insurance. Now, when it comes down to also how life insurance is very beneficial, if you live too long, the kid's going to be grown. The debts will be lowered, the mortgage will be paid off, and then we finish with college. But what happened to you during retirement? You want to position yourself where you can get tax-free lifetime income because that's going to be needed during the time of retirement. So that's how you could use life insurance in the right way. So where you could buy term and invest the difference in cash by your life insurance. And that's the power, guys, So the great thing about our firm is that we have a wealth of resources and a wealth of services that we offer. We help families with college planning, retirement planning. We help families with even, life insurance. We help them with even estate planning. Name it, we could do. I like to say that we're sometimes like the financial foot locker, right? You could be like a one-stop shop where we may help you. Now, the good thing is that we represent many companies. We represent companies like AIG, North American, Athene, Nationwide, Americo, just to name a few. And guys, that's what's amazing with us. We provide you with the education and the choices. So here's the next step. Let's begin with your financial independence. My commitment to you is very much this: I'm going to be able to help you and provide you with a free financial needs analysis. And based on the information that you provide to me, we be able to identify solutions and strategies that could pretty much address your current concerns and also fill in those potential gaps, start your path to financial independence. And what's your commitment to us? Is very simple. If we do a good job with you and you like how we do business, we would love for you to refer families to us. So now that you see that what our firm is all about, you see what we do for families and how we help them. Here's my last question for you. My question to you is, where do you see yourself within our firm? Do you see yourself as a financial educator with us? You like to learn how you can earn an extra $1,350 in our firm? Or do you see yourself as a student? You want to come and learn about those 6 steps that we talk about: how to increase cash flow, how to manage your debt, how to put together proper protection. Or maybe do you see yourself as someone that just want to refer us people that we could educate on your behalf? Or maybe you see yourself as all the above. All you have to do is let us know, where do you see yourself, and we look forward to empowering you. Comment below and also get in touch with the person that shared this with you, and we look forward to empowering you. Once again, guys, thank you for being here. My name is Coach Keyon Corniff, also known as Mr. Finance, your favorite financial educator and business coach. And I look forward to continue empowering you, and I can't wait to see you at the top. Until next time, have a blessed day. Talk to you soon. Bye bye.